Good morning, everybody, and welcome to this Saffery webinar on HMRC's guidelines for VAT compliance. My name is Nick Hart, VAT Director in the firm. I'll also be joined this morning by my fellow VAT Director, Callum Richards. We were hoping that VAT Partner and Head of VAT, Sean McGuinness, would also be able to join us this morning, but unfortunately, at the last minute, Sean is unavailable and sends his apologies. So you've got just the company of Callum and I for the next 50 minutes to an hour or so, talking you through HMRC's VAT guidelines for compliance. Just like to go through some housekeeping for this morning. This webinar is being recorded. And the recording will be available on our website for up to a year. You will receive an email with a link to the recording after the session within 24 hours. So hopefully by tomorrow morning, that link will come through. We'll also, I think we're also making the slides available as well for you to refer back to. Throughout the webinar, we can't see or hear the attendees. But you've got the opportunity to ask questions throughout the session. So please pop any questions that you have into the Q&A function. There's a Q&A button on your screen at the bottom. So please do put questions into that, and we will do our best to answer those throughout the session. Obviously, we've got quite a large number of attendees. So if there is a high proportion of you that are as keen as mustard this morning and want to ask lots of questions, we may have difficulty getting through all of them, but we will do our best to cover the main themes coming through. Throughout the session, there'll be two polling questions, one at the start, one at the end, just to assess general kind of mood, consensus and view on where you are with VAT compliance in your particular organisation. So just moving on to the agenda very quickly. So we'll start off with the first polling question in a second, then I'll go through an introduction with you to what we are talking about today. Then a few points on HMRC's general approach regarding the guidelines for compliance that have been published, why they've done it, what their view of this is. Then some practical applications. So what should businesses and organisations do with this information that is now available? We'll talk a little bit about the importance of identifying control weaknesses and what to do, having identified any control weaknesses within VAT compliance processes. We'll highlight some specific trigger points, which often lead to VAT compliance processes needing reviewing. Different things happening in businesses and organisations which will prompt a review being appropriate. We'll talk through the risk of doing nothing. So carrying on as a settled state, thinking all is okay, and not acting on the guidelines published by HMRC. We'll talk through how Saffery is helping clients in this space. Go through another polling question at the end, and then some Q&A kind of in between each bit as appropriate. So without further ado, first polling question should be popping up. There we go. When was the last time you critically reviewed your organisation's internal VAT compliance processes? So if you could all choose one of the most appropriate answers there, that would be greatly appreciated. I'll just wait a few moments while you consider your responses and pop those in. I don't know if we've got any results coming through yet. Here we go. Excellent. So the majority of respondents there, 32%, so have done some kind of internal VAT compliance process review within the last 6 years. Interesting that 17% have responded there that they haven't been a review hasn't been done to their knowledge. That's interesting. Thank you for taking the time there with that question. So what are we talking about today? So in November 2021, HMRC announced that they would be working on and publishing what they described as guidelines for compliance. At the time, HMRC's kind of headline on this was that these guidelines would provide HMRC's view on complex transactions or widely misunderstood transactions or novel risks. Now, underneath that kind of headline was some additional kind of aims that HMRC had here, working on these guidelines for compliance. And they're on the slide there. So making taxpayers aware of HMRC's expectations with regards to tax administration, provide assistance to organisations and businesses with respect to effective compliance management. So giving organisations information to enable them to think about their tax compliance management and what HMRC considered would be effective management. Obviously, minimise risk of non-compliance and errors. So giving businesses tools, if you like, to minimise the instances of errors and issues arising, but also encouraging businesses to establish a framework of best practice with regards to tax administration and how to avoid pitfalls in that process. It's fair to say that the guidelines that have come out across a number of taxes since November 2021 do fall within that kind of overriding headline from HMRC of complex or widely misunderstood or novel risk. So there have been guidelines on R&D, on patent box, on capital allowances and transfer pricing. And the first VAT guideline was released in March 2023, and that concerned apportionment of consideration where there was a supply or supplies with mixed liabilities and how you go about apportioning that. And that probably was right, and it did fall within this idea of novel risk or misunderstood transactions. But the focus today is the guidelines that were published for VAT in September 2024. And this goes further and beyond that headline of complexity or novelty. And this really goes back to HMRC's overall aims, I think, which we've summarised there at the top of that slide. So making taxpayers aware of expectations and helping businesses establish a tax administration process which is fit for purpose and robust enough. So it does go beyond that that we've seen for other taxes so far in terms of the guidelines that have been published. And there's the website address for the guidelines themselves for VAT compliance. So HMRC's general approach to this particular VAT compliance guidelines publication. So this is an extensive document. I think there are 10 sections to it, covering all potential aspects of businesses' operations. Very detailed and very thorough. So it's a good opportunity to use this information for the benefit of process improvement, etc. The guidelines are aimed really at all VAT registered persons, regardless of size, complexity, type. HMRC do suggest that it's perhaps designed for those businesses which are accounting for VAT on an invoice date basis, but we don't feel that that's necessarily the case, and it applies to all VAT registered persons, whether you're cash accounting, whether you're on a simplified VAT accounting scheme such as the flat rate, annual accounting, etc. So it really is something that all VAT registered persons, businesses, organisations need to be mindful of. The guidelines themselves set out HMRC's recommended approach to VAT compliance to enable businesses to review their accounting and compliance process to ensure VAT is being accurately accounted for at the end of that process when numbers are hitting VAT returns and being submitted, etc. As part of this, and as part of the 10 sections of the guidelines, is the focus on control points. So identifying controls which are being applied within an organisation to ensure that is being brought to account correctly. But identifying what those control points are and assessing whether they are actually fit for purpose, whether they're doing what they are designed to do, whether new control points need to be inserted into the process. Through these guidelines, HMRC is encouraging businesses to have a tax control framework. So essentially a documented process in which risks are identified and the controls that are being put into place to address those risks and reduce the chance of VAT errors occurring, and how those controls will be tested for their effectiveness. This is not a technical document that HMRC have put out, which goes back to the point that it isn't really designed to address any kind of complex transactions or novel risks. It is much more than that. It's not going into technical aspects of VAT, such as VAT liability on certain supplies, or whether or not VAT is recoverable in certain circumstances. It's much more to do with the sort of back to front VAT compliance process, which ultimately results in VAT being reported on VAT returns, and how correct that position is that's being reported. As I said, not something just for large businesses. Some businesses are particularly complex for VAT purposes, regardless of the turnover of their operations. They're dealing with multi-rate supplies, complex VAT recovery because of things like partial exemption, non-business activities, etc. So this isn't just something that large organisations need to be mindful of. This is appropriate to all. Okay, moving on. I just made aware just prior to the start of the webinar that Callum was running a little bit late, unfortunately, because he had been stuck in traffic arriving to the office. I don't think he has yet joined. So I'm going to continue going solo for the time being. So what should businesses do next in terms of these guidelines being available? So what do businesses do? So I think it's an opportunity for businesses to assess their current state in terms of their VAT compliance process. So how do they currently put a VAT return together? And what elements of the business are feeding into that process? And I think you'd be surprised if you haven't done such a review before, just how many parts of the business might have some impact on the VAT reporting. There are quite a few touch points that may not be immediately obvious when you start from the beginning of the process and work it through to the end. So what we kind of recommend really is something like a root and branch review of current processes. This is not just about preparation of the VAT return itself, but starts to look at things that are happening upstream in the business that ultimately contribute to a sales invoice being issued or a purchase invoice is being received and approved, etc. So really go into detail about the business, the operations of the business, and where you will find touch points that have relevance to the VAT reporting process. Having identified the process and has documented it and gone back to all the different facets of the organisation that, as I said, that would have some impact or influence, is to review the controls that are currently in place to make sure that things are going smoothly, going in the right place at the right time, and obviously in the right value. So very much a case of saying, well, we've got this process, this is how all the transactions are feeding through, this is the start and finish, but where in this process, where in this course of events do we have checks? Where are we applying checks? Where are we reviewing things? Who is doing that? Who is responsible? And how effective are those controls and checks that are in place, with the overall aim, obviously, of minimizing the risk of of things going wrong, not being reported correctly, etc. So a case of really of an inward look, be critical, identify weaknesses, inefficiencies, and touch points where controls could be tighter. So do look at things with a fresh set of eyes, with a critical and inquiring mind, to really test whether or not you think your processes are robust and sufficient to enable that to be reported accurately for the majority of the time. Obviously, errors will occur. That is a fact of life, but do the controls that you have in place seek to minimize the instances of those errors. Callum is just joining us now. Morning, Callum. I'll give you a few minutes to sort
Nick.
There we go. Excellent. So I'll just give you a couple of secs, Callum, just to collect your thoughts. So just continuing to work down this slide. So yeah, you might to build in into reviewer a period of, okay, well, these are the touch points, these are the current controls we've got. We need to test how effective those controls are. So whether a period of testing, whether that's 1 VAT quarter, 2 VAT quarters, if you do it on that basis, but just kind of give yourself a period of time over which you're going to assess the effectiveness of those current controls, and obviously then tweak where necessary with a final documentation. Callum, I've probably covered a little bit of what I was going to ask you first, but just going back to the second point on that slide, if we may, have you got any sort of more practical thoughts on what a root and branch review might look like?
In terms of that, I think it's about really like looking where the process starts. It's not simply a case of looking at the final mile, and what I mean by that is, just running the VAT return reports and then compiling the VAT return itself into the 7, 8, or 9 boxes that you normally do. You should be looking at the master data that you hold, the sales order process, cash receipts, who is involved at those various steps. Is there a record of the potential risks that may arise? And what controls do you have in place to help minimize that risk? And that's really on a kind of business by business basis. So for example, some businesses may have high transaction volumes but low values, so there may be a lot of scope for errors due to the sheer number of transactions, but the actual tax at risk will be quite small. Whereas conversely, a business may undertake a smaller number of transactions, but those transactions are at higher value. So therefore, while the scope for error is potentially smaller, the tax at risk will be much more. And that should be taken into account when designing those controls. So in terms of looking at that, I always find that a risk register is helpful, which sets out your various risks in your VAT accounting process. And in some cases, it may be that the more irregular transactions have the most risk attached to them because they're kind of not business as usual. So kind of once you've gathered all that information, then it's really about looking at what controls you've got in place, testing those controls, how could they be improved? And then I think finally, has all that been documented?
Great, thank you, Callum. So yeah, as part of, as I think I mentioned earlier, that I think organizations might be surprised when they sort of get into the detail of this, that kind of how many parts of their organization have an influence on ultimately on the VAT return that is submitted. So we're not just looking at the tax function or the finance and accounting function within a business. We're looking at the sales team, the ops team, logistics if you're a business which supplies goods. So yes, your shipping team, shipping department, even HR, you know, with VAT recovery from employee expense claims, for example. So what, you know, does your expense policy and how expense claims should be submitted, which is often an HR kind of function in the first instance. How robust is that process to ensure that when employee expenses are being entered and processed, that the VAT that is falling out of that is actually recoverable and the rules are being followed with respect to recovery. For smaller organizations, I think if you started looking at the guidelines first, and as I said, there are 10 sections to it, it's a vast document, lots there. I think it's probably fair to say that you perhaps wouldn't, you perhaps get a bit lost in it, and actually it's probably best to do your review of your current systems, processes and controls, and then look at the guidelines and pick out the bits that are relevant, because there are going to be bits in there that won't be relevant. So there's a section, for example, on cash. If you're a cash business, how the cash handling process is managed and controlled. So if you're not a cash business, that won't apply. So yeah, if you're going to look at the guide, don't be daunted by the sheer extent of the document. Maybe perform your review internally as we've suggested, and then go to the guidelines really and see if any of that HMRC has written would be helpful in identifying new control points and new controls to be implemented. Okay, just moving on to the next slide. So we're very much today talking about practical application of this rather than going through any of those 10 parts of the guidelines in any great detail. So this is very much a practical focus. Callum, we've talked about controls and tests, etc. Have you got any thoughts on how a business would test a control to see how effective that control is, and to see if it's fit for purpose and therefore still warrants a place in the process, if you like?
Yeah, I think when testing controls, it's important to run multiple scenarios. For example, if you're selling goods to an overseas customer, can someone override the delivery address? So can a UK delivery address be input in there? Alternatively, if you're providing services to a customer with multiple addresses, how is the VAT treatment determined by the system? And what controls are in place in relation to that? I think in some cases it's probably worth setting out a schematic or a diagram of the control, which kind of visually shows how it works. But I think realistically, it's just about running different scenarios to make sure that control is working as it should be. And if it isn't, then you can identify that and put procedures in place to correct that.
Thanks, Callum. We've had a question in that is around, obviously we're talking about process and controls. If you are in senior accounting officer regime or you are subject to business risk review, how does this kind of this fit together? Does that kind of cover off already what we're talking about here and what HMRC have put into these guidelines? What's the kind of connections here, or is there any?
Yeah, I think that's a good question. So where a business is already in the SAO regime, the SAO, the Senior Accounting Officer, is required each year to either certify that the company had appropriate tax accounting arrangements throughout the financial year, or alternatively, the company did not have appropriate tax accounting arrangements throughout the financial year. Therefore, if a business is already in SAO, we'd expect that they should have documented process and controls, and ideally a risk register. So these new guidelines for compliance should not be onerous for businesses that are already in the SAO, because they are somewhat, down the journey of having documented their processes and controls. I think that's similar for a business which has had a BRR plus review from HMRC. HMRC would have been looking at their processes and controls as part of that review when HMRC is, reviewing their procedures and it ultimately giving that business a rating. So similar to SEO, we'd expect that a business that has gone through a BRR plus review would have reasonable processes and controls in place. So, in both cases, you should be kind of well down the journey of what HMRC think or what HMRC expect to see in terms of good practice.
Thank you. And I guess that's kind of related to that is businesses that are subject to external audit. I suppose is there a question of is this all within the remit of the external auditor? Shouldn't the external auditor be testing these controls and documenting these VAT reporting processes? What's your kind of view on that, and whether or not that is generally within scope of audits?
I would say it's not within scope of audit. The purpose of an external audit is to review the financial statements to ensure that they're a true and fair account of financial performance and current financial position. So an external audit wouldn't typically include a review of the VAT processes and controls.
Good. And then some larger organizations or organizations, I guess, which are subject to particular regulation may have internal audits that they're subject to. Obviously, those internal audits will perhaps start to look at some of these areas. But in your experience, what's kind of the interaction from the output of an internal audit with let's say the tax or accounting function, finance function, with regards to sort of any identified weaknesses and control issues?
I think clearly an internal audit does look at what processes and controls are in place, but the internal audit is certainly not approaching that from a VAT lens. So whilst there is processes and controls that are reviewed, then they're not as in depth as there would be as part of this kind of review.
Yeah. Okay. So I think the message is there that even if you're audited internally, externally, then this is still something that you need to look at in terms of your VAT compliance process and how all the transactions flow through the organization that ultimately end up on a VAT return. So it not to be disregarded if you think that you maybe can fall back on the comfort of an internal or an external audit, that's not necessarily going to be the case. Good. I think we've covered that. So again, sticking with some practical points here, there are circumstances which can arise which really prompt a review of the VAT compliance process to become necessary. So these are a good, the HMRC's guidelines are a good kind of reminder that there's this resource that can be referred to. But if you're in a settled state, we'll talk about that in a second, then that's one thing. But if you are, if your organization or business is subject to some change and some fluidity, if you like, in certain aspects, then the period of review and refresh might be more frequent than might otherwise be the case. So let's just have a look at some of the things that can happen, which will probably warrant a VAT compliance review for your business or organization. So changing key personnel. So that could be even for small businesses, someone that has basically done the VAT return for a long time, no longer in the business, has the full knowledge of everything, has oversight. There's perhaps lack of maybe a documented process formality, so then there won't necessarily be a nice formalized handover in terms of documents or notes to give to the next person responsible. So at that level, a change in that person, leaving the organization, someone else picking up that role will be, I think, an absolute must really to review current processes. We often hear from clients that they do certain things in a certain way because that's how they've always been done. and they haven't really been kind of challenged or questioned, and it's been status quo. When there's been change in personnel, they've just picked up what's been done before, and it's a good opportunity to review the robustness of the processes that you're inheriting if you're a new person in a role that is involved in the preparation of the VAT returns. More fundamentally, I suppose corporate restructuring, if your organization's subject to some M&A activity, if you're acquiring new companies, merging, your group, your corporate group is expanding or contracting, whatever the case may be, that is a very good opportunity. And I think Callum would agree that that's a must, following those sorts of transactions, that you do take a step back, and then review your process to make sure that whatever changes there have been in the corporate structure and group, how you are amending your current processes if they need to be amended, and how new controls might be required. You might be acquiring a business with a kind of maybe a supplementary service or supply offering to the one you offer as your core business, and it might be something slightly different. So it may come with its own VAT complexities, which your process would need to accommodate and be mindful of. An obvious one, new finance system or ERP system being implemented, and we've seen a lot of instances where new finance system has gone in and there have been issues with the VAT reporting as a result. Once the new system is in, not quite maybe configured necessarily in the most efficient way for VAT purposes. So that's a common occurrence in a business's life cycle, if you like, that would necessitate the need for a VAT compliance internal review. Change in advisors. Yeah, so if the current process that you have has been put in place and kind of something that your previous advisors have helped you worked on, changing advisors, having a fresh set of eyes look at it that hasn't previously been involved is incredibly valuable sometimes. Coming to it without kind of any prejudice or input previously, and fresh set of eyes and clear mind on it is very valuable. So worth considering if you do change your advisors. New lines of business, particularly if you're starting to transact internationally, is a big one. So you might have just been supplying your domestic market historically as a business, but then you're expanding overseas. You're opening up your goods or services to international customers. So you're starting to transact internationally. Whole different ball game from a VAT perspective. So how are you going to cope with that to ensure that ultimately the transactions resulting from that different type of trade are being reported correctly? Final point, payments on account. So if you are entered into the payments on account regime due to the size of your reported VAT liabilities, then you're going to need to make monthly VAT payments to HMRC. So your process will inevitably need to be flexed to accommodate meeting those monthly payment requirements. Callum, we probably got people on the webinar that think, well, I haven't got any of this going on. It's a pretty stable state for our organization, kind of business as usual. How often would you recommend a business in that that feels like it's in a stable state? How often would you recommend that they do review their VAT compliance process?
I'd suggest every 3 or 4 years, really, if there's no changes in the business and it is just kind of business as usual. So none of those points you've gone through there have really occurred. Every 3-4 years would be reasonable in my view.
And do you think that would be HMRC's expectation in that kind of situation?
I think so, yeah. I mean, yeah, it comes down to what is reasonable, and it's for some businesses this will be quite an onerous process, when they've got everything else to deal with. So I think HMRC wouldn't expect you to be looking at this, certainly not on an annual basis. A regular basis would be more appropriate. and I think that would be 3-4 years.
And who should, I mean, I think we have a view that who should own and initiate such a review. That would be the tax function or the finance function within an organization.
Yeah.
Now, obviously, smaller organizations, there might be just, that might effectively be one or two people. Is there any kind of where would we see the focal point, and who would own that process, even in smaller organizations?
I think in a smaller organization that's not, it's certainly not got its own tax team, or its finance team is kind of limited in numbers. Really, it's, the person who is responsible for preparing the VAT return and the person who's responsible for signing that off. Those should be two different people. It shouldn't be the preparer, shouldn't be the person that's signing off the VAT return. So between the two of them, they should really be responsible for this.
Okay. Just as a reminder, if you do have any questions as we're working through the content here today, do pop those into the Q&A via the Q&A button. So I guess, what is the risk of doing nothing? So HMRC have published these guidelines. They're extensive, very detailed. They're almost kind of handing business the opportunity to absolutely get things right. So what would be the, what is the risk of not ignoring it, but not acting on it? Not acting on those guidelines now being available when HMRC have kind of played their cards, if you like, and said, look, this is what we expect businesses to have in terms of process and controls. So risk of doing nothing, obviously there's the risk of error. So VAT being misdeclared on VAT returns, so output tax not being brought to account correctly, VAT not being charged properly on suppliers where it should be charged, input tax being reclaimed on non-recoverable cost elements such as business entertainment, sort of a lack of control over purchase invoices. So you run the risk of receiving purchase invoices not issued to the correct entity with the correct details on, which will, HMRC take a dim view of in VAT reviews generally. Also, so you've got the greater risk of error detection by HMRC, obviously leading to interest charges and penalties. I think it's fair to say we are seeing more HMRC inspections and assurance events than has been the case over recent times for a number of reasons. COVID aside and resource issues, HMRC did, the frequency of assurance events did decrease in our experience, but they are now doing more again, and obviously as a department they are being encouraged to recruit quite heavily, and we would expect more VAT assurance officers to be recruited and trained. So HMRC can be much more active than they have been over the last 3 or 4 years, I think it's fair to say. So any errors that are detected, assessments would be raised and interest charges applied. If you haven't kind of followed these guidelines and acted upon them, then the risk of higher penalties increases. So penalties are based on behaviours, and if HMRC see that you're acting as a diligent taxpayer, you've got your tax framework and your kind of process documented, you're taking all reasonable steps and controls in place, etc. Errors may still happen. That's probably a fact of life. But if you're taking as all reasonable care, then penalties may not be applied. But if you've chosen not to act on HMRC's guidelines to review your position in terms of your VAT process, and errors occurring, which would probably have been avoided if those controls were in place, then you are likely to face higher penalties than would otherwise be the case. There's also commercial implications of when you get things wrong, when transactions are not treated correctly for VAT purposes, where you're charging VAT when VAT isn't chargeable, or vice versa. You're issuing invoices as a supplier, not necessarily in line with instructions from your customer, etc. So it can lead to commercial implications and pressures in the supply chain, etc., which ultimately can result in delays in your sales invoices being paid, which is a big issue for businesses. So there's commercial implications of getting VAT wrong, clearly. Kind of just on the last point, if I could bring you in on this, around due diligence, and when businesses are looking to sell, it's obviously due diligence process. As part of that, how might advisors undertaking due diligence in the future use these guidelines almost as a way of identifying or maybe changing their approach on a DD, identifying processes and controls, and therefore, making recommendations for warranties, etc., and even price reductions? What's your view on how that might evolve?
I think in time we'll start to see this as part of the questionnaire that goes out. So if someone's going through a tax due diligence process, there'll typically be a questionnaire issued for all taxes. And at the minute, obviously, from a VAT perspective, that is not on a lot of the questionnaires that are issued to businesses when the advisor is that information gathering stage. In time, this is likely to find its way onto that questionnaire, and the advisors, going to be asking what processes and controls do you have in place for your VAT accounting, VAT compliance, and if those processes are non-existent or the processes are not particularly great, then that's going to be highlighted as part of that due diligence report that gets issued. And then when a potential buyer or investors coming along, then effectively that's going to cause a bit of an issue, because if they've not got the confidence that the businesses accounted for the correct amount of VAT, then potentially that is going to impact upon the price that is going to be paid for the business. Or if for example you get private equity investment, then that may cause issues with that. Or alternatively, the investment might still happen, but then immediately on the rise of that, then there'll be an action point to ensure that these processes and controls are put in place.
Thank you. And similarly, I guess on HMRC assurance events, how would you anticipate officers always using the guidelines as well as to say, look, as a diligent taxpayer, how have you implemented what HMRC have published here? How have you acted on it? Do you think that they'll be raising that as a question and a point in the future?
I think they will, yeah. I mean, it's still new at the moment, so it's highly likely that a lot of the HMRC assurance officers have whilst they may be aware of this, they've certainly not completely understood it. But in time, that will change. And as you've said, as penalties are based on behaviours, then HMRC will certainly look to say that, well, you failed to take reasonable care because you don't have appropriate processes and controls in place. So where you do have those processes and controls, then that is certainly more of a defence to say, well, an error has taken place despite us taking reasonable care, which, as you say, errors are a fact of life. They're always going to happen. But if you've done everything you can to reduce those errors, then that should certainly reduce the scope for penalties from HMRC.
And I guess we might see a little bit maybe that tying into HMRC officers inquiring a little bit more into how MTD is being implemented and making tax digital, beyond the actual submission of the VAT return through compatible software. In my experience, I think it's fair to say that during assurance events that officers haven't generally looked to test how data is flowing through the process and whether there is the appropriate digital links in place, which MTD specifies is necessary. yeah, in my experience, they've just been slightly slow on the take up of looking at those elements. But again, might we see this as the guidelines almost as a catalyst for them to start looking at maybe MTD and the digital process, the digital links and digital journey of information through systems and the VAT reporting process.
I think that's an interesting one, yeah. I mean, as we've both seen, certainly from an MTD perspective, HMRC are able to charge penalties now where people are not compliant with the MTD rules. But to date, we've not really seen HMRC seek to charge those penalties. So again, this is, one that something that could happen in future. HMRC are obviously wanting businesses to reduce manual processes, hence bringing in Making Tax Digital. They are wanting a fully automated process. So in terms of kind of really what something good looks like, you'd want a fully digital process through MTD, but then you'd want that documenting at the side of it. So HMRC can see both hand in hand. That's ideally where you'd like to be. I'm not saying that all businesses are going to be able to get there, because there are manual adjustments and things that take place. But if all those adjustments are well documented in a processes and controls document, then when HMRC are coming in and doing a review, then they've got all that information to hand, and they can see that.
Thank you. And we've had an interesting question in from an attendee who said that they outsource their VAT compliance process. They haven't said whether we do it or not, but they outsource it to another firm. And the question is, to what degree does the business's sort of documented process need to incorporate what the third party outsourcing company is doing to pull the VAT return together once they've got the data? How kind of what's the link there? How much is there a link, and does the business need to incorporate all of that the outsourcer is doing as part of their process to manage their risk?
I think realistically, yes. Obviously, the submission of the VAT returns is the business's obligation, not the outsourced provider's obligation. So if errors have been made, then HMRC will look to assess the business, not the outsourcer. While I appreciate that, commercially where a business pays someone to prepare their VAT returns for them, they expect that those VAT returns are done correctly. So that's a separate commercial discussion, but certainly from a VAT compliance perspective, we would expect that the process that is undertaken by the outsourced provider is documented as part of these procedures and controls.
Thank you. It was an interesting question. So it's not just a case of I've kind of passed all the responsibility and obligations onto another party, which I'm paying them to do. It's still very much something that the business itself needs to own and manage and document, etc., and get comfortable with. So Callum, with this information, how are we assisting clients since the guidelines have been published? How are we helping? What are we doing? How are we working with business on this?
Yeah, so at the minute we're working with clients really to assess their steady state, i.e. what processes and controls have they got in place currently, and undertaking a review of those. Obviously, businesses are at different stages. Some businesses have got well-documented processes and controls, other businesses not so much. So where those processes and controls are really not as established as they should be, then we're helping them, map out those controls and the various touch points across the VAT accounting process. We're also helping businesses to test their controls. So that may be, controls that they've already got in place, or controls that we are now recommending. We're running tests on those to, ensure that they are appropriate. I think as well, it's always helpful to have another set of eyes. Certainly, if you've got current processes and controls, having someone look at those, effectively giving you a view on whether they're reasonable and appropriate is a good thing to do. And then, I suppose, finally, we deal with HMRC on a day-to-day basis, so we kind of have a good understanding of HMRC's approach and how HMRC view the world, which certainly sometimes is not on the most pragmatic basis. So we can help with dealing with HMRC, and if someone is on notice that they're going to get a VAT audit or assurance review, then we can kind of come in before that and help them, get them prepared. And part of that might be looking at existing processes and controls and carrying out a review of that.
Good, thank you. Yeah, we kind of have first-hand experience of what HMRC look at regularly on assurance events. Obviously, business specific in terms of what the business is doing, but there'll be some elements of VAT reporting that they'll always have a look at. So it's good to know what for them it's low-hanging fruit in terms of opportunities for assessments, because they often find errors with respect to even things like business entertainment, VAT recovery on road fuel, some basics like that. So that's often a good starting point. If you are an export business, how good is your export evidence for zero rating, for example? That is something, if you do zero rate export supplies, you can guarantee HMRC will look at that on an assurance event. So that is a critical part of an export business, is having the relevant controls and processes in place to ensure that appropriate export evidence is obtained, etc. So just a couple of examples how our insight into HMRC's approach is very helpful in sort of targeting or a starting point in a process review. I think that brings us towards the end. I think we have the final polling question now for you, if you'd like to, when that pops up. So, having listened to all this from Callum and I today, how confident are you that your current VAT compliance process within your organisation would meet HMRC's expectations? So there's some options there ranging from very confident to not confident at all. So if you could give that some thought for a few moments and pop your answers in, and then we can have a look at the outcome. Don't think we have any final questions I haven't addressed from attendees, so this will be the final part of the webinar. Okay, so somewhat confident is the most popular answer there. It's good to see that only 1% is not confident at all. I'd be slightly concerned if that was quite a high number. So yeah, the middle ground is the general consensus there. So somewhat confident, but yeah, perhaps food for thought today that we've given you with respect to revisiting and refreshing, reviewing your processes and controls, etc. So that brings this webinar to a close. On behalf of Callum and myself, very much thank you for attending. I hope you found this useful. If you have any questions you didn't get a chance to ask during the webinar, then please get in touch with Callum or myself or your regular Saffery contacts, and they'll forward those questions on. But thank you all again, and enjoy the rest of your days.